Hello everybody, it's me the Bossog. We're back for another portfolio update, and honestly, it feels pretty much the same as last time, but also a little bit different. Let's do it. Alright, so standard stuff, we're going to start with transactions. Since last time, what's been happening? Dividends, sells and buys. No deposits yet, although I am expecting to make some depositing next week, which will feel really good. September is expected to be a really good month for me dividend-wise. It's slightly back-end weighted, but some of the good-sized ones have started to arrive. So Games Workshop here, pretty solid, I would say. However, I decided to put this into SMT rather than back into Games Workshop. I think it was more or less broadly priced, and as we'll talk in a second, it's since gone up sort of to where I think it is very fairly priced. So I just sort of prefer to buy into SMT, which to me looks a good 20% undervalued at the moment. Also, as well, Games Workshop sits outside of my ISAs, so I'm basically receiving the dividend and then putting it into my tax-advantaged accounts. I actually can't really buy more Games Workshop shares without potentially having to pay tax on my dividends, because it's, again, outside of my ISA tax wrapper, so partly that as well. I'm also now getting my quarterly dividend from my REIT ETF, so I've gone with TRET. This is mainly because I really like Prologis, PLD, their largest position by some way. I think it's actually undervalued in its own right. Otherwise, I like the blend of the ETF itself, and I also like the quarterly pay, and the fact is I have it in dollars as well, so there's a bit of balancing there. So, and yeah, as a result, I just decided to put this back into TRET. I'm basically flat on my position, up slightly on my share price and down slightly on FX, so fine buying at that kind of level. Quite late on Friday, I decided to trim about 1/7 of my position in this XDWH ETF. I would describe this as my mature healthcare ETF. It's fine. It doesn't excite me in a huge way. I just like to have it there because I think it's important for a bit of balance. I sold this up very slightly green, but not by a huge amount, and actually decided I would put it into my Dutch-focused ETF, which is IAEX. It's really just because a couple of their larger positions, sort of ASML, Adyen, they've been beaten down recently, and I'm a bit bullish on the Netherlands. I quite like the kind of concentration of this ETF, and so I decided to sort of buy. I was down 4%. I don't have a huge position, so actually this kind of meant I was down like 2%. It was a relatively sizable addition to what I was already holding. And I will continue to buy at this kind of level. I do think there are one or two better things maybe to do with the tech, but I just thought it was sort of a bit opportunistic, whereas I think sort of my positions in the big tech ETFs still have a little way to go when they'll be discounted, so I decided to prioritize the Dutch ETF over that. So that was my decisions. Like I said, there'll be some more updates next week, both from dividends being received and also new capital expected to be added. Outside of that, if we go to our dashboard, you can see here I didn't do an update. I should probably actually make this the 15th. Didn't do an update last week. That's just basically because of work, as we'll talk about shortly-ish. So over the last couple of weeks, I'm down about 1,500. It's been pretty wild, honestly. Some of my stocks have moved quite significantly, both up and down. It's just, unfortunately, two of my four biggest stocks have been pretty beaten up. Not really because of anything changing to do with the company, but as we'll talk about shortly, to do with sort of large shareholders selling off their position, which tends to sort of scare people for obvious reasons, I think. I think for me, the big surprise this week was that the FTSE 350 is actually having a really strong month, certainly compared to me in the S&P 500. So I can't remember the last time I was behind the FTSE 350. It feels like it's been a while. Obviously, it held up last year because it's so defensive, etc. And I think sort of mining stocks and a few others really sort of underpinned it this week when even the S&P started to struggle a little bit, to be honest with you. So that was I was genuinely shocked when I realised I was back behind the FTSE 350. Definitely not ideal as we approach our 3-year anniversary, which is our assessment point. But again, I do hope that we'll sort of see some of the short-term weakness with our share sales that have been happening to force our share prices down. We'll wash through by then, but we will see. We'll keep an open mind as much as we can with these things. Profit's been all over the place, as you can see. What has been quite interesting to me is because I'm sort of 50-50 between the S&P and the UK, is that actually my UK shares have been sort of recovering. Again, here we sort of still have our legacy situation with two Russian miners that's made it very difficult for me to be green on my UK positions, but it is what it is, and we're just trying to make the best we can after that event. So Yeah, what's really happened is sort of my US positions have taken a bit of a pullback, and my UK ones have started to look a bit more solid. I personally believe, by the way, that UK equities are significantly undervalued, trade at a clear discount in terms of multiples to their US peers, even accounting for things like differences in sector makeup and things like that. I think the UK at the moment is a place to put money from a number of reasons if you're interested in sort of value, as well as, like I say, defensiveness and I think actually a bit of diversification. The UK stock market looks quite different, in my opinion, to the US one. I think last I checked, the FTSE 100 only had 3 recognised tech companies in it. Obviously, compare that to the S&P, it looks very different. So in terms of breakdown, actually a lot of my larger positions had interesting couple of weeks. I'll start with some good news. I'm just going to do this in order basically. So Gamma, which has been my largest holding for a while, I would say pretty solid results. On the upper end of my own expectations, which I do accept are more bullish than the market, but still pretty good to be sort of in the top sort of 10% of my estimate range. You do have to read into the details because it looks like even though their revenue went up, their profit margin, net profit margin went down. But that's because the UK's recently moved from a 19 to a 25% tax, so there was a big difference. Once you actually strip out and compare on a like-for-like basis, they also saw a significant improvement in their profitability. I also think that their sort of weaker markets, where they've been buying companies, are starting to improve as well. You've got things like better recurring revenue. They're clearly very good at taking customers on the journey from sort of legacy telco to sort of hosting an IP. And I'm convinced that there's tons of tailwinds for Gamma over the next few years in their markets. And I still maintain they're one of the best in the industry. So it was good actually to see them get a bit of love. I didn't actually really expect that the results would produce what it did. Like I say, I mean, Gamma's been trading in the sort of £10 to £12 range now for quite a while. But it was quite noticeable, and it definitely did go up. Sort of, you can see here, sort of the better part 12% following the results. They stuck with their progressive dividend policy as well, so dividends up sort of 14%. They have a commitment to raise it 11 to 15% each year, so nice if you're interested in dividend growth as well. And broadly speaking, I think it just continues to look pretty sweet, all said and done. SMT, I will just mention that they had a pretty good couple of weeks as well. Just some of their larger holdings saw a bit of love. Even things like Moderna, which is no longer their largest holding and is, in my opinion, the weakest part of SMT, saw a bit of love as they sort of like looked to, I guess, mature their business. And then a lot of the other holdings in SMT sort of hold up pretty well. I think SMT is still an absolute buy, and when I add more money next week, SMT will be where most, if not all, of my money will be going. I genuinely think this is a clear buy, and I'm a big fan of putting my money where my mouth is. So unless Gamma has a stellar week, I actually expect that SMT will be my largest stock by the end of next week, but we will see. Less good now is the next couple. So Amcor, it's a bit annoying really. I did trim my position, but only trimmed by 10% when it was just under $29, just because I thought like there was a bit of a disconnect between the share price and the earnings. As I think it's the same reason I sold Micron a few months ago, and the same reason in general why I've sort of been pivoting my semiconductor play. I still think in the long term semiconductors are there, but I think they're a better value plays basically at the moment. However, I'm still really optimistic on them, which is why I kept 650 shares. And unfortunately, one of the sort of founding family decided to sell a fair chunk at $24, did sort of a listing. And that just kind of crashed the share price, went down like 15% in one day. This was almost a bit of a shame because, like Biden is out in Asia at the moment doing sort of, diplomacy. And Amcor, it looks like their new factory is going live sort of in October, I believe it is. And I mean, that's a huge investment for Amcor, several years in the making. And, Amcor isn't a massive business, so that sort of like $2 billion factory is a huge part of their market cap and should really underpin their growth. You sort of get a little bit of the geographic de-risking as well by going with Amcor, specifically in Vietnam. Obviously, it's still close if anything was to turn hot. But it's certainly less risky than sort of China or Taiwan at the moment. So I think that's a good shout as well. And certainly if you listen to their earnings calls like 2 years ago, when they were talking about this, that was part of their rationale, was kind of trying to get the best of both worlds, basically. Genie is honestly very similar. One of the sort of founding shareholders, Apax specifically, decided to sell, I think it's almost all of their position at $5.35. Now, I think I've been quite honest, and I've got to know Genius quite well. I do think that when it was running into like the eights just before their last earnings, which were fine by the way. I did think the market was getting a bit ahead of itself. It still hasn't turned a profit, although its European arm is, or it has always been profitable. It should overall become profitable this year, and then next year its US arm by itself should become profitable. So you've got this like journey. I've been sort of trusting Genius for about 21 months now, ever since they sort of started to deliver and they had a investor day. And so I think the kind of sell here was a bit. I mean, I don't really know why Apex did it, right? They could think, of course, very differently to me. Definitely different to consensus as well. I think, honestly, the consensus estimate on this stock is overrun. You're looking at like $9, $10. Again, I don't really understand that, to be honest with you. And I think I need to be honest with myself, seeing as this is one of my sort of legacy bag, basically the only legacy bag hold I kept. So in a way, I'm disappointed because this was really gaining momentum, and at one stage it looked like I was going to go green on this. I need basically an $8 share price to turn green. So now, unfortunately, I'm quite red again. But we remain long term on both of these because I think, again, they're really important companies in their respective sectors, and so we will keep the faith. Another company that I've forever been bullish on because I think it's amazing is Games Workshop. They actually put out, I think it was a quarterly trading update, but it was just before their AGM. Honestly, really solid. Said broad-based improvements across the business, significant improvements in revenue and profit in particular, that was up 46%. Now, the margin on this now is just ridiculous. They are such a profitable company. They sort of make Apple look less impressive than Apple clearly are. And I know they're nothing, they're tiny compared to Apple, right? But they are genuinely on the fringes of getting access to the FTSE 100 now with their market cap at this kind of level. So that would be amazing to see that, I have to say. But they are so profitable, and the future only looks up if anything materializes from that Amazon deal. And honestly, I'm still convinced, and I've mentioned this before, I know, but I'm still convinced that everyone's talking about the Amazon deal like it's transformational. Nothing has happened. Nothing has happened from the Amazon deal. Like anything that there's no reason to buy or sell other than like the hype of the Amazon deal. Like nothing is feeding into the numbers just yet from that Amazon deal. It may well in the future for sure, right? It's got an opportunity to bring the universe to more people, but nothing material has happened as a result of that, right? This is actually, in my opinion, the reason why you're seeing this is because all the investments that they made over the last 2 years, right? The increase in their print house, their paint house, their warehouse logistics now, the shipping costs have gone down, the hydrocarbons have gone down that basically all their models are built from. You're sort of seeing the costs are going down and all of the infrastructure that they built. And that includes, by the way, things like a new CRM system, right? Finally getting to grips with their portal and their management of sales, as well as really compelling law building, and their 10th edition, as it's called at the moment, sort of just really enjoyable from a kind of law perspective. So basically their product, right? Or at least the foundation for their product. Again, this is still a business that makes most of its money from figurines. So really impressive numbers. It was difficult to dislike it. Another 50p dividend declared, and again, depending on exactly where their share price is, you can very easily see this as like a 4 or 5% dividend. Games Workshop don't have a progressive dividend. What they do is they class it as truly surplus cash, which they did define a little while ago as basically being anything more than 6 months working capital. Anything beyond that, they basically just give back in dividends. So there's a real like cash flow amazingness for this business to just keep producing dividends on that basis. It's never going to be like a pretty graph, right, that you might get with some of the more defensive, let's call them traditional dividend companies. This is a company that's going to give you money as and when it feels like it ultimately, but it's really turning itself into a financial powerhouse. And I think it was a really impressive update. Now, in fairness, I didn't trim. I halved my position. Again, part of this is to do with sort of putting money into tax-advantaged accounts and moving things around. But I don't have any plans to reduce my Games Workshop further. Right? At this kind of level, I have no tax implications, and I'm okay keeping $4,000 outside of my ISAs. So we'll be keeping this basically, and just every time I get dividend, I'll just move it into my ISAs. That would be nice. And we will go from there, essentially. So this will remain a pretty sizable stake for the foreseeable future. And then I just want to finish on Redrow. I suspect anyone who's not UK won't know Redrow. They're a mid-sized house builder here. the UK house builders I've spoken about for ages, and it is a sector that's really beaten up. And as a result of that, in a way, any house builder that puts out even remotely reasonable numbers is kind of rewarded. I would say Red Rose wasn't quite as Vistry. I think at the moment, as good, sorry, as Vistry. I think at the moment, Vistry is kind of my poster child for a house builder that's really crushing it, and isn't getting enough credit because they're part of an unloved sector. But I would put Redrow up there as well. Redrow is quite a different business to Vistry, to be clear, but it has some of the similar advantages, and it doesn't have like a slow-moving land bank. It's not heavily exposed to sort of cladding issues of the past or expensive urban areas. Again, that has implications for the speed of sale as well. And likewise as well, most of Red Rose customers are basically people looking for forever homes, who are quite well off, who are looking for 4 or 5 bed homes, sort of 750,000. I think their average sale price is like 600,000. So clearly, targeting a certain demographic, which is less likely to be impacted by things like cost of living, etc. Of course, they did see an impact. Their revenue and their profit was down sort of between 1 and 4%. And I think that's worth actually clarifying, because last year they had sort of a statutory write down that actually meant if you just sort of don't include that, if you do include that without caveating it, their profits actually surged like 70%. But I think we should be clear that if you look at the underlying profit, it was down fractionally, similar with revenue, and also they did produce fairly gloomy next year guidance, but again, no worse than what was already expected, and probably slightly better, which is why the share price reacted reasonably well as a result. So I still think Redrow is really good. Interestingly, I did also own Vistry in the past as well, and decided for Redrow over Vistry. We'll see if that's a mistake long term or not. But I really like the kind of strategic pivot that both of them basically did a year or two ago. And yeah, like I say, I've backed my horse now, so it's too late to do anything about it. And we're just and to be honest with you, at this kind of level, if I was still able to buy individual stocks, I would be quite happy to buy more Redrow. I think again, just the sector and the stocks within it are so beaten up that you have to have a pretty disastrous earning to get further beaten up. So that's my sort of thinking there. Outside of that, the only company that moved materially was Salesforce. Had a bit of a pullback, but honestly, I'm fine with this. As I've mentioned before, I've decided to hold. We're basically flat at the moment, up a few percent, but we're just riding that. I thought actually MPW was here as well. I just wanted to talk about them. Just to say, where is MPW? Sorry, guys. There we are. Okay, so yeah, they had a worse week last week, but I mean, there's no new news on it as far as I can tell. The court in California basically stopped them from sort of doing a debt for equity swap. We'll see how that basically progresses. Sorry. I also don't have any more news on their sort of defamation lawsuit where they're suing one of the short sellers for not really going with his opinion, shall we say, and that they're making it quite clear that it's sort of slanderous rather than an opinion. We'll see how that goes. Yeah, we continue to still back this. I do reassess reasonably regularly, but nothing's changed for me to feel any differently. And honestly, I think this is one of the most like Marmite stocks, right? Anyone who's British knows Marmite. Kind of either love it or hate it. For me, it's clear value. For other people, it's just like the worst stock ever in a complete value trap. But so obviously one for the riskier, but we're going to stick with it anyway. Outside of that, most things were up and down modestly, so I'm not going to spend too much time on what I already think will be a fairly long video. And I think we can probably call it for there. I will, however, before we finish the video, of course, we'll call it for there on our portfolio, and we'll have a look at how the rest of my life is going at the moment. Alright, so outside of all that then, so contribution to wealth, on the good side, my wife's pension caught up. Actually, her employer let us know that they changed payment providers. And basically they're getting stuff up and running with their new payment provider. Took a lot longer than they were expecting. Story totally checked out, in fairness. Like they paid it early the month before, then didn't pay at all in that month, and we raised it. But now everything's caught up and they're back to their sort of early payment in the month, so nothing untoward as far as I can tell. And yeah, if they did move payment providers, I mean, I work in payments as part of my day job, and I know that can be extraordinarily tricky to work through those kind of things. So all good basically from that side. I also had a pretty magic session on Thursday. I was in London. I was in central London, for a work do, and basically afterwards went to play some poker. I used to play poker reasonably regularly, especially sort of for a few years, sort of 4 to 5, 6 years ago, before a certain virus was about. And I'm a pretty solid and profitable poker player. However, to win 2.7k at a 1-2 table in just over 6 hours doesn't happen too often. That's my second biggest winning session ever. And to be honest, it joins like 1 and 3 in terms of being clear outliers where I sort of won more than £2,000. It's really rare to sort of have that kind of return on what's verging on minimum stakes. So that was lovely. And honestly, I love gambling. It's one of those things I'm always mindful of, because you have to be careful of things that can be quite destructive. But again, poker I think is okay in moderation. And yeah, everything went well after the first hand where I lost a coin flip, and then after that it just felt like I couldn't lose. And when you're like playing well and you're hitting well, and people get scared, basically they like move out the way. Like somebody folded jacks into my ace queen, which is fine, but like when he was like doing speech, before he laid it down, he was just like, I just know I'm not going to win. I was just like, well, thanks, I'll take that. So it was kind of one of those nights really where, again, I lost a coin flip in my more or less first big hand, and then after that just felt like I was unstoppable. So that was super good fun, and yeah, 2.7k is a significant addition. Now, the reason why it's not showing up in my contribution to wealth yet is because that's basically my investments, whereas it is showing up in my total wealth, which includes cash. Usually there isn't the kind of difference, and literally I was only able to pay the money in on Thursday from my session. So I mean, this is basically going to fund some stock buys next week, which is awesome, because yeah, I mean, I had hoped to start buying stocks again this month, but maybe not quite so early in the month. So I'll take a good £2,000 and basically put it toward SMT and whatever else I feel like buying. But yeah, it is included in the total wealth here. And to be honest with you, the poker win, my house value technically increases by 1/12 of 2% each month, as well as my mortgage payment, which is also being overpaid at the moment, and then my wife's pension, both the catch up and the normal one. So that sort of is the sort of £6,000 here growth between the end of last month and currently. Actually, as you can kind of see by this video, a lot of my stocks have gone backwards. I would say my pensions are kind of flat, just because they haven't had the sort of Amcor and Genius exposure that I have. So hopefully this will recover a little bit better, but still £6,000 within a month is okay. My daughter's move to Hargreaves Lansdown is also quite slow, although we did discover that was because a 5 had been read as an S on my account reference with Nutmeg. So basically Nutmeg said, well, that account doesn't exist, and then I had to go back and basically start it again. So that was a bit frustrating, but hopefully we'll still get that sorted. Outside of that, so stuff at work, phase 2 was launched, which was awesome. That's basically our new billing and payment system for all of our new customers. Beforehand we were only doing sort of one of the sales channels, so that was good. So far so good, essentially, so that's awesome. Phase 3 has also started. At the same time as I was doing phase 2, I was sort of already giving what I needed to see in order to do phase 3. Phase 3 is the huge one, to be honest. It's the one that has the most possibility of going wrong, because we're basically moving many customers from the old systems to the new one. So we're going to be commsing hundreds of thousands of people and moving them, and my team's also involved in the cleanup of that as well. Make sure we sort of take it, the comms is good, the data is good. We're doing a bit of translating as well, not just the migration. So it's pretty complicated, but actually I'm now feeling like we're in a pretty good spot. So hoping to start on migrations toward the end of October, but we'll see. I'm feeling good, actually. I have been a bit more nervous about this in the past than I have been currently. Revenue assurance continues to go well. Nudged this up slightly, moving from 6 to 8% above target, just because we found a couple of additional wins. There's sort of an element of stabilization at the moment, just because that same team is involved in the data checks before we do the migration. So priorities. PTC reduction, so propensity to contact. This is a big driver for anyone who's involved in sort of utilities. Like margins are so modest in a lot of utilities, including telco, that like reductions in contacts are a good way to sort of keep your profits where they need to be to make money. Obviously, you don't want to make it impossible. There is definitely a blend, and basically the more expensive it is to acquire a customer in your industry, the more important it is to have good customer services. In the telco that I work at, I would say that because we're sort of doing post-pay, we have contracts, we have competitors, it tends to be quite expensive to acquire customers, and therefore it's quite important to not lose them. But at the same time, there are definitely sort of some things where we're forcing customers to contact us that in an ideal world we would not be. So that's that. So I basically had to do a big presentation about sort of what we need to do and why, and any sort of contingencies and etc. I think it went well. Honestly, I was really pleased. Actually, I think it went really well. A few people asked questions, but they were sort of encouraged by what they were seeing that was already happening. So that was great. Team organisation I put as complete. However, I am working on budgets for next year, so that's ongoing at the moment. Hoping to get that stuff signed off by November. It's normal stuff, I suppose. But actually, at the same time, I'm on like my version 9 or 10 at the moment, so I say it's normal stuff. I wish I wasn't quite spending so much time on it, but planning is important. And then doing a data overhaul, just not much progress, just other priorities. So I think it's okay. It's sort of a nice to have. It will be needed sooner or later, but it's sort of this year as a nice to have. Also, not good on the gym. I haven't actually been in 2 weeks. I haven't even really done a workout at home. You'll see in a second there are other reasons outside of work, but work was definitely a contributor as well. I sort of want to get back into it. I have sort of been a bit restless as well, so hopefully that's a good sign. My weight actually went down. I think that's partly because I'm eating and sleeping better. So even though I haven't been doing the workout, I was quite pleased for the first time in several weeks, months even, to see a reduction in my weight. So maybe we can still try and target 100 before Christmas. We'll see. Yeah, and I guess, the taking care of myself, just much more regular on the sleeping, which is really what this relates to, as well as the eating and cooking my own dinners, making sure I don't snack as much, etc. So, yeah, that feels positive for sure. I'm pleasantly surprised. Then relationships, again, for anyone who's like new, I know you might seem really strange that someone needs to sort of prioritize relationships, but actually, like when you have like a busy life, or like for me personally, my general disposition is to be quite like numbers driven, maybe a bit cold from time to time, and maybe not prioritize the right things. These kind of things I need to remind myself to do, frankly. So it may seem odd to people, but I find it quite useful. So in terms of my wife and daughter, it was my wife's birthday actually today on the 16th. So we went, we did some shopping. She wanted a new bag for her work laptop, so we found a nice one. And I took care of our daughter for most of the day, sort of 80 to 90% of the day, so she could sort of have a nice day. We did similar for my birthday, so I think that's nice. And also cooked her a nice meal. I like cooking anyway, and my wife likes eating like nice food, so that was good. And then my daughter, this is really the reason why all of us in the Boss Hog house have been really tired over the last couple of weeks, and that's because my daughter started like big school, so not nursery, right, proper school, and we thought that she would just be fine because she's been going to nursery for like 2 years and is used to actually quite long days. Like she does 10-hour days at nursery, so we thought she'd be absolutely fine doing like 7-8 hour days at school. And just I think like the increase in kind of structure and maybe difficulty and newness of it all, maybe the travel is fractionally longer but not really. But everyone's found it more tiring than we were expecting. So that's just been a drain, really. I would say we haven't really got ourselves back to normality just yet. My wife and me have also had like work shindigs this week as well, so we're both a bit tired from that. Again, I spent all night in a casino. So just everything, that's been super disruptive, and we haven't really got to normalise that yet. That's definitely something we need to improve on. By pure coincidence, one of my 3 sisters shares a birthday with my wife, second birth date, and is only 1 year apart, so that's almost exactly the same date of birth as well. So I'm going to be visiting her next week. It should be good. I'm looking forward to it, to be honest with you. Probably the sister I'm closest with. I think we kind of got a lot closer when my mum passed away. We were like joint executors of the estate, and it sort of was. I mean, it's not no fun, right? But it was as good as it could have been. She was super helpful. So that was. I think she really stepped up. She's like my little sister, so it was good to see her stepping up, to be honest. And then, in terms of friends and connections, I did actually catch up with a couple of people on LinkedIn. I don't know why LinkedIn just seemed to be suggesting the same people to me over and over again. I was like, maybe I should catch up with that person. So I was like, hi, how is life? So that was good. We'll see if anything comes of it, basically. So far, it's just pleasantries. But for people I've kind of worked with in the past and have great respect for, would happily work with for or in my team in the future. So that was something. You could also say that's part of professional, I suppose. But I think with the professional here, I more mean it as kind of like career planning and a lot more deliberate. This is really sort of people I would quite happily go for a beer with rather than, recruiters. Well, some of them are quite nice, some of them are a bit more functional, but that's really the difference here. So professional, I did meet up with one of the two recruiters I'm going to be meeting up with this month. Almost certainly just as a pleasantry. This recruiter, she specialises in sort of finance roles. And to be honest with you, normally that's not for me, especially because the most similar jobs are basically debt, which is part of my remit, but frankly the least enjoyable part of my job. However, I basically had to turn down an amazing opportunity for interview for like a global head of collections job that they were looking for, and it was like 150 grand. So it was a really great salary on actually a pretty interesting job. Like commercial B2B type debt collection and sort of stuff I hadn't really done before. And to be honest with you, like debt as part of my remit, it has the most room for technical improvement out of my areas. If I do my areas being billing, payments, and collections, like billing is pretty advanced, payment especially can be quite sophisticated, but debt still feels like so often when I talk to like debt management companies and stuff, they're basically talking about going through a list of numbers and doing it's just dreadful. It's so archaic. So when I saw this job, I was like, actually, if this had come to me in like 2 years, I would have been really tempted. But I'm kind of enjoying work at the moment, even though it's difficult, and therefore I decided not to. But it was still really good to have a chat with her and to sort of see if things do happen in the future. And I think what I do is quite niche as well, so it never hurts to have like these kind of connections in case something opens up in the future. Plus, I got a free couple of coffees out of it, so that's also nice. In terms of development, regular YouTube videos, obviously I skipped last week, although I did at least do a video last week about wealth, so we're improving, I suppose. Studying Polish still lacks structure, however, my wife feels more confident now, like talking, especially directly to my daughter, but including to me, and I'm sort of trying to listen as well. I go a bit like embarrassed when I can't keep up, so I'm keeping it quite subtle. But I'm just like trying to take in as much as possible. I think here I really need to get some structure with my Polish. The one time my Polish really expanded significantly was when I was like going to study and when I was like going through reading material and so on. So I think that would be good for me to get back into that. Similar with story here, like no progress since last update. I really want to get something finalized so I can start looking for illustrators by the end of this month. Maybe that's still achievable. And in regular reading here, I did do a couple of. Basically read through 2 books whilst I was on holiday in Poland with my family. But I haven't actually got any more reading material, so I need to buy something off Amazon. So if anyone has any book ideas, sort of either about investing, history, philosophy, politics, feel free to drop me a recommendation, and I will definitely have a look. Is there anything else to talk about? I think that's basically everything for now, guys. Again, we'll try and do an update weekly moving forward, if not more. And actually, to be honest with you, especially if I do go ahead and like make SMT my biggest position, I'd really like to do an overview of SMT, just because I'm convinced that the market and people that I sort of see comment on it kind of misunderstand. So if work allows next week, I'll try and sneak in a video on SMT, especially because, like I say, I expect that they will end up my largest company. So that's maybe something to look forward to if I don't overpromise. That's everything for now, though. Thank you very much for watching, everyone. I've been the Boss Hog, and good luck with your investing. Bye for now.